In today's video, I'm going to show you how I analyze Bitcoin, Ethereum, and Solana using high time frame down to low time frames. And at the end of the video, I'm going to actually show you one of my favorite strategies to get the best entries possible on Bitcoin, which is my favorite thing to trade. But all three of these are really great to trade, and I'll show you how do I analyze the comparisons between the three as well as the trends of all three to kind of know whether you should be longing them, whether you should be shorting them, and kind of what to watch out for so you don't get caught in a bad trade. So this is Bitcoin. This is the 4 hour. What I like to do is I like to start on the weekly just to kind of get a sense of the overall structure and just kind of get an idea of like historical precedents to see what Bitcoin tends to do, because history doesn't repeat, but it often rhymes. So we like to use history as kind of a precedent. So first off, one thing when you're looking at a chart is where are the wicks? Where are the wicks forming it? Because the wicks really represent supply and demand in the market. When you have wicks to the downside, that represents demand. When you have wicks to the top side, that represents supply or a distribution area. People are selling in that zone. So when you typically see something like this, I call this a banker's trade because they have 3 wicks to the downside. And typically what they do is they use short-term traders liquidations to fill big positions before heading up. And when you see wicks to this top side like this, that almost always indicates distributive area. So you could see over here, distributive area, distributive area. You got one here, so it looked like it was gonna sell off, but we got kind of this fake breakdown and then some ETF news, which pushed us through that resistance zone there. It was a choppy zone here. A lot of people thought we were gonna head back down to this weekly 32,000 level, but there was a negative funding, ETF rumors, there was institutional buying, open interest was high, so there was a lot of things in that zone. I posted on Twitter like 1,000,000 times not to get caught in a short in this zone because there was a lot of signs pointing to that we were going to have a nice big short squeeze to the upside and potentially test all-time highs, potentially even higher. So let's take a look kind of historically, right? So we've got this weekly analysis. We've got wicks to the top side over here. So clearly this 72,000 region was a distributive area, but we did have a lot of wicks to the downside. A lot of people were thinking that we were going to just kind of hold the all-time high and then break out, similar to what we did back in 20,000. We kind of rejected a few times. If you zoom in, you kind of get in a sense of that structure. We kind of rejected a few times and then we broke through. A lot of people, myself included, I thought we were going to break higher. But you have to adapt to the environment. So there's a few things you can do to kind of analyze. So I'm using thicker lines today and I'm using a black chart so you guys can see it easier. I rewatched my video from yesterday. Kind of hard to see on the white background, so I wanted to do this. So this is definitely not a great sign when you break out all-time highs, but you can't really hold it on a weekly basis. We had one candle that kind of closed up there, but immediately kind of closed back below fairly quickly, and then we rejected a few times. So we know that 72,000 to 69,000 is a distribution or a distributive area, right? So we also want to look at what happens after we kind of go through these distributions, right? So the other thing is the macro structure. So over here we had higher high, higher high, higher high, lower high, and then what happened? Well, we sold off, and then we sold off again, right? So we had back-to-back red weekly candles. So over here we had higher high, higher high, higher high, higher high, and then our first macro lower high. So we just sold off. Now, we've got a few things we can look at on this weekly area. We've got this zone here, which was clearly support. You can use the bottom of the wicks or you can use the candle bodies, whatever works best, whatever fits the best, right? So we got 1, 2, 3, 4, 5, 6 supports, 7 supports there. So we know this region is very important. 61,000 is a absolute must to break back above. So this gives us a really good idea of maybe this is a good potential short zone because currently we're in a sellish, a bearish market trend. So maybe if we get back up here, it's a good level to reshort. Okay, so keep that in mind. All right, so now we're going to zoom into the daily. Okay, you can go 3-day, you can go daily. I prefer daily, and notice my chart is very, very clean. Okay, I like to keep my charts super clean, super simple. Support resistance is like my main bread and butter because you're looking at actual price action where, institution, whales, retail is all buying and selling. And you can use these support and resistances and make tons of money just doing that. Now you can add RSI, which is one of my favorite tools, or you can add moving averages. And I prefer the 200 EMA, 200 MA, simple, add them to your chart. And they give you a lot of clarity. So you can add the moving average exponential, moving average simple. And they also have bands as well. And you can, you can make your own, or you can just use one that's on TradingView. All right, so we've got these bands, and I can make these a little bit brighter and a little bit thicker so you can see them. Oops, come on. All right, so I like to kind of show you guys everything just so you can do it yourself if you want, because it's a little bit easier. But so simple moving average, as I explained yesterday, it's just a smooth price action over the whatever period you're using. So if it's a 200 period moving average, that's 200 candles of whatever time frame you're on. So if it's a daily, it's 200 daily candles, and the price is aggregated or averaged, and then it gives you a smooth curve. So when price is low and price is high, it averages that out. So it gives you a moving average. Now, why you like to use moving averages is because a lot of algorithms use them in trading strategies, and a lot of high frequency trading algorithms use them. So they're good to use because they're very reactive. So we're kind of trading with institutions versus trading against them. So that's why I prefer to use moving averages, because you're basically getting telegraphed information from institutions. All right. So we have the EMA and the SMA. So clearly what you can see is on the exponential moving average, which is this red one here, we are currently below it, and we have not closed the daily candle above it in 1, 2, 3, 4, 5, 6. So currently our daily trend is to the downside, and our moving averages are flattening out, which means price action is also flattening out, choppy. Okay, so we can think that we are currently in a downtrend. We tried to squeeze back above it, which I posted on Twitter, but we are currently below it. So if we can get above these, that's where you can have or assume a bullish mind. Okay, and what you can see is every time we break below these, we reject, and then we sell off, and then they use that as kind of these sell-off points for further downside or further distribution. We broke below it. We rejected, came up, we rejected, came down, we got back above it, used it as support, bullish, right? So you can kind of use these and assume with the daily trend, they're very, very powerful. Down here, a lot of chop, not really great for trend either way, but in general, these are usually historically very, very strong, okay? So when we're on the daily trend, what we have to assume is if we break down from the daily, we're either going to go down to the 3-day or the weekly. And Bitcoin tends to like to go down to the weekly. And the weekly moving averages are currently down here somewhere around 38,000, which is what I mentioned yesterday. What I like to trade preferentially is the 4-hour, because the 4-hour gives you a lot more information. It's a little bit faster reaction. I use the 4-hour, and then I use 15-minute for my entries. So right now we're testing the 15-minute 200 MA, 200 EMA. But with any trend, with anything you're going to use for entries, you want to see is it reactive? If you can find something that's hyper reactive, then you can use that over and over and over to make higher probability trades. Remember, investing is about speculation, trading is about probability. So all you're doing is you're trying to stack things in your favor to find the higher probability trade setups. So that's RSI, that's moving averages, that's your MACD, that's your that's your price action support levels, that's your diagonal trend lines. All these things are just designed to give you confluence in probability. The problem that I see a lot of traders do is they use things that aren't reactive, right? So they're like, oh, I'm going to trade off the 15-minute 200 MA, 200 EMA. Sometimes they're very, very reactive. Sometimes they're not. Instead, what you want to do is you want to search for time frames that are very reactive. Okay, so 30-minute, we had some wicks above. Hourly, I'm guessing, is a bit more reactive. So hourly is giving us a really, really nice, clear and clean trend. Short, to the pico dollar, right? So this is going to give you your best entries for shorts or longs or whatever, because it's super, super reactive. And historically, the hourly 200 EMA, 200 MA are very, very good on Bitcoin. Hourly, 4-hour, and daily. At the start of this trend, the 30-minute was actually super powerful. Here, nothing but chop. This is rangy chop. Very hard to trade unless you're just using support and resistance and one of my favorite trades, which I call the liquidity trade, which is I'm going to show you at the end of the video. Okay, so here's what I'm seeing on Bitcoin, which is what I highlighted yesterday on Twitter. So this is the key level, key support level. Okay, now we want to get back above this, and that'd be like a low time frame 4-hour market structure break. We would get our first higher low, right? Because it didn't claim this. That's a lower high. Boom. Okay, lower low, and most likely we get more lower lows. Lower low, 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 right? So lower lows and lower highs all the way down. This is, a bit of a higher high for the first time, but again, it's still a lower low. So this is still a structure down. Now, one thing you can see is that where's the wick, right? So the wick was here. So that sends, gives us an idea. Okay, there's some buying pressure here. But then we got 2 wicks to the top side, wick to the top side, wick to the top side, wick to the top side. That means sellers are in control. These wicks give you all the information you want to know when you're glancing at a chart. Where are the wicks here? To the downside. There's one here which gives us a nice little short, potential opportunity. But you want to look where the wicks are, because that tells you who's in control and where the market tends to go, because that's where buyers show up, right? So where's the wick? Wick's here. What do? We go up. Back here, wicks were top side, we go down. Wicks were bottom side, we go up. These wicks really give you a lot of information because it's aggressive buying or it's aggressive selling into the market, okay? So this is a very, very bearish looking chart at the moment because we had a fake breakout, this wick to the top side. We swept all short liquidity in this region, right? All longs or all shorts that, kind of entered in through here, they probably got blown out on this little tiny move, and then bigger institutions aggressively sold here. So they got great entries at 59,000. So now bulls have a lot of work to do to reclaim this candle, okay? So this was a pretty decent short opportunity because we were, we didn't close, we didn't confirm. Nothing about this is bullish at all. But there are signs that are showing that we may have a potential bullish breakout, like open interest, negative funding, and some other things. The problem is the German government just keeps selling, but they're almost done selling. So overall, this is a bearish rejection. I would expect a visit to the range lows. That's what I'm looking for, but really no great trade setups until we retest a bit higher, or until we retest a bit lower. Nothing super great. This was a pretty good short setup, and this short setup up here was really great. This candle rejection right here, and then 72. Where was it? Yeah. This candle right here was the best, and I'll show you why at the end, and why that's one of my favorite trades. Okay, so let's move on to Ethereum. Hopefully that was enough information on kind of how to look at a chart. We're going to do the exact same thing here. So we're going to zoom out to the weekly, and I'm going to show you a few things on Ethereum that you can also use to kind of put in your bag of tricks. So with Ethereum, and I want to go back to Bitcoin for a second. With Ethereum, it's kind of bearish, kind of bullish. There's a few things to look at with this chart, and why we're at some key levels. So first off, we have this massive ascending triangle, which I mentioned about 1,000 times on Twitter. And usually these ascending triangles, if you take the base here to here, it usually hits about the same amount of percentage. So 144%, we come from here and we hit about 80%. So 144% is, kind of a little bit higher, around, right around 5,200. So that's typically the target of an ascending triangle that looks like this. Massive consolidation over the course of 2 years, and then finally you get a breakout. And one of my favorite trades of all time in crypto for swing trading is the weekly breakout retest. So when you get these weekly structures like this, where you've got clear weekly resistance, clear weekly support, it breaks out. It's so awesome when you can get a decent entry on this weekly support zone. And I was screaming, from the top of my lungs on Twitter that this was going to be a very great entry, and it was. It went all the way up to 4,000. where we rejected at the, I think it was the monthly level or the yearly level or something. Yeah. So this yearly level, 3,700. So let's zoom back out. So right now, Bitcoin is battling to reclaim this 200 EMA, 200 MA band, okay? If we can get back above it, that would be ideal. But right now, this doesn't look too great because we're below the daily. But if we look at it without our bands, okay, because whether it's reactive or not, that's the real question. If we look at it without the bands, there are some things that Ethereum does have going for it. First off, we retested this weekly support and we held it, and we're getting kind of a confirmation bullish candle. Now, the other thing is we're breaking back above the weekly resistance here. So if we can hold till Sunday above this level, then we can assume that we're kind of still holding a bit bullish. And Ethereum's looking good. Now, the other thing that I like to do is I like to look at ETH BTC to see what ETH BTC looks like. ETH BTC gave us a really great entry down here where it kind of swept this zone here, but really it just kind of came back to retest this breakout point. So it broke this weekly resistance, came back above, came back down to here. Really nice candle down here, and then we got a breakout with the ETF news. Now we've gotten a few of these breakout candles, but it does seem to slow bleed back down for whatever reason. Ethereum just really can't get much mojo going, and I think that it's because mostly for Solana. And so when we look at Solana, let me show you Ethereum. So I do think this is bullish. We're getting a nice candle here. This could just kind of be a dead cat before we retest lower again. But overall, I think with the ETF coming up, I think we've got some bullish news in the fact that ETH BTC is holding some strength. I think that ETH BTC is not a terrible, or I think that Ethereum is not a terrible trade. But I do think that Solana is a bit better of a trade. And here's why. When we zoom out to the daily, you can see the difference in chart structure just based on, make that a little bit thicker for you. The difference in chart structure on the daily is, did I make that 200? Sorry. The difference in chart structure is that we're still bullish. We're still above the daily trend. There's a lot of wicks to the downside, wicks to the downside. And we're still holding kind of in this potential consolidation pattern. And, I have a target of around 260, and the 260 target just comes from Fibonacci extensions. And hold on, let me do this real quick, and then and let me just make all of these white so you guys can see it a little bit better. All right. And my target just comes from Fibonacci extensions. Just like that. So 269 is basically the 1618 breakout target. If we can close above, and we can basically start showing some bullish strength. If we can hold above this resistance line here, and again, Solana, we're going to zoom out to the weekly support, resistance, kind of a bit of a fluke here. Resistance, support, support, support. So this level is our key. If we lose this level, then we can assume that we're probably going to break down to, maybe this zone down here. So again, it's all about probabilities. You're not trying to predict the future. You're just trying to take high probability trade setups. We are getting lower highs, okay, but we're essentially consolidating. We kind of did something similar back here, not as long or not as extended out, but so we're still holding a nice bullish structure here that if we can get any sort of a breakout, I think this is a decent entry. I got an entry around 120, 122, 123, kind of a tap in this support zone here. And I'm still holding that entry. It was mostly just a spot buy, but I do think Solana looks better. And now you can also look at Sol BTC. So this is Solana in comparison to Bitcoin, right? And so Sol BTC also in a nice uptrend, So Sol, performance-wise, has outperformed Bitcoin around 300% this year, which is massive considering Bitcoin went up, which is why Solana itself has gone up so much more. You know, I think $8 to $200. And so Solana is still in an uptrend against BTC. It's still holding our daily trend. And so you have to assume that when it's in an uptrend, it's going to continue in an uptrend. So you kind of, again, trade with the probabilities, with the flow of the tide. Instead of trying to counter trade strength, you typically want to long strength instead of trying to counter trade it. And then you can also look at Sol ETH as well. And so Solana has outperformed Ethereum. I mean, since the start of, let's see, I mean, basically since the start of this bull market, has outperformed Ethereum 400%. So it's been a much better trade. And the question is it going to continue to be a much better trade? We have a few things. We have a few potential spot Ethereum, spot Solana ETFs coming up. We saw that get announced. So the question is will it get approved? The other thing is Fire Dancer is coming alive for Solana, which is going to massively speed up Solana and rapidly decrease failed transactions, because you're going to have parallel operating systems essentially. So two Solana clients on the validators that will validate transactions, but will keep the entire full Solana history, but they'll run them differently. And so when one validator operating system goes down, the other one is still there, right? So if there's a bug here, this one still works. And so I think this is the first time I've ever seen two clients running for a blockchain, which is very interesting. And I think Jump Crypto is the one that's pushing that initiative. But that's why I like Solana. And you can kind of, put your own assumptions on Solana, whatever you like to say, whether it's FUD because it was affiliated with FTX or because the chain goes down or whatever. The thing that you want to use as a trader is just technical analysis. So there's not a lot of wicks to really give us a lot of information on the Sol ETH chart. But when we look at Sol USDT, we've got a wick to the top side, which does say, but we're kind of real low time frame and we're still in this daily candle, so there's still time. But there's more wicks to the downside right now. And so it looks like maybe there's like a big seller that's just trying to kind of exit out at this level. You could see like whenever we get a pump, we just kind of like get one single candle down, one single candle down. So this usually means that like someone's just kind of letting the market kind of rebound and then sell into it, rebound, sell into it, rather than someone like Germany who's just aggressively selling off. So out of the three, I do like Solana the most, but I did promise you a really fantastic strategy for Bitcoin. And so this also works for Ethereum as well. Solana, less usage, and it's mostly just in highly liquid environments. So what I like to look for are hourly and 4-hour liquidity sweeps for Pico top, Pico bottom, short and long entries. So let me show you at 72,000 what I mean. All right, so here's our high. And if you just draw a line across, and if you're looking for a short entry, what they're going to do, and you got to make this thin so you can see it. I don't know if you can see that. But these are called liquidity sweeps. And I've talked about this before on my YouTube channel, but this was back in 2018, 2019. So this is a liquidity sweep, and this usually gives you more information than anything else. This is a big player at play. And they do this super, super intentionally to grab all of the stop losses in this area to fill their position for whichever side they're going to go. And in this case, obviously it was a short. So 72,000, there was a big wall. We came up and we just swept the high of this candle. So I call this trade the liquidity sweep trade, okay? Some people call it the Canfield trade because I've made it popular on Twitter. I've posted about it 1,000 times. But you can actually see so I would have expected this high to get run with this candle here for a short setup, but they did that right over here too. So we made a high and then they made this little sweep right there. Super, super fantastic spot to get an entry. And what you can also do is you can also look at trading light, and typically there will be like a wall there on Bitfinex, BitMEX, or Binance Perps futures. And you can usually see in the order books whatever entity that got filled there. So here they swept the high. So for a long position, it actually does the opposite. And I'll show you what a long position does. Right here is a good example. So this is same thing, right? They just sweep. Let me zoom in for you guys. They just sweep the low just like that. If you look at it on a daily, it's going to just look like a tiny little wick. Boom. They sweep the low, and they basically make people close their trades. Again, right here. Some of my favorite trades that you could ever take, because it gives you typically Pico bottom and Pico top entries. Let's see if they do any kind of that shenanigans over here. They swept the high here, but that's not like a really great example. Yeah, right there's a really good example where they just do enough to sweep that little candle high. Let me zoom in for you. But yeah, these little Pico top entries, these little liquidity sweeps are beautiful. ETH actually had a really good one just recently for a nice little long entry. Let me show you. So see this little candle right here? When you draw it across, it just likes to barely sweep it. You see that little wick right there? So these are how you know what direction the market typically likes to go. They just sweep all liquidity. They go back and they fill that little, they reclaim that little tiny liquidity. And then typically we get bullish because, like a large institution or, a serious market making player filled right there because they took out all stops, because most retail traders, they're going to set their stop below the low. They're going to set their stop in this little zone, and this is what I call the guppy zone, because this is where the sharks like to visit. They like to feast on their little guppies. All the people setting their stop losses or have liquidations in this little zone, and then it immediately gets ran. And then what do you see is they typically try to revisit that zone. So you never want to usually buy the first bounce. You always want to wait for that secondary retrace. And so these retraces usually do one of two things. They usually go double bottom, or they come right to this candle structure right here on the 4 hour. So they'll typically do something like where they'll bounce up and then they'll come down here and then they'll bounce again. And you can see that on a lot of different altcoins, a lot of Ethereum trades. Actually, here's a great example. Perfect example. So you come down. So instead of double bottoming, what did it do? So it comes down, it comes up, and then people that long this candle, they kind of panic sell as soon as they see, two candles the other direction. But then it comes right back down to this level here, because that usually gets guarded. And then we get a nice little push up for a nice trade. And let's see. Yep, so this one kind of did the same, double bottom. We got a sell off here. What does it do? It comes back right back down to this candle. Sells off here and then pushes back up. So that's just another really good example of a trade setup. When you get these capitulation candles and you get this first candle up, it's typically not the best to just buy the first green candle. You typically want to wait for that retrace where you get either the double bottom or you get that simple level there, and then you can buy there and then set your stop below there with clear invalidation. Okay. That's it for today, guys. Hopefully you enjoyed the content. If you want more updates like this, let me know in the comments. Click like. If you're not following the channel, click subscribe. I'm going to try to do a lot more videos for you guys. I have a lot more free time. I bought an office, got a green screen. I have a bunch of kids at home, so hard to make YouTube videos. That's why I took a long break. But if you guys like these, let me know. I can also do a lot of altcoin ones if you want. I don't typically trade altcoins just because the liquidity is not that great, and the trading, you tend to get wicked out a lot because of the market makers. Like if you want to look at Actually, I'll do that on the next video. I'll go through some altcoins and just kind of scan some of my favorites. But hopefully you guys like this, and I'll see you on the next video. See ya.